Performance auditing is generally concerned with auditing the efficiency and effectiveness of an entity's operations. It is also known as operational auditing, or management auditing, or managerial auditing. Performance auditing is an important part of internal auditing. First, let us identify the differences between performance auditing and our financial statement audit. As we know, the financial statement audit reports to shareholders on whether an entity's financial statements, its financial position and past financial performance are fairly presented. In contrast, the scope of the performance audit is wide. It could be any aspect of an entity's activities. The objective is to evaluate the efficiency and effectiveness for the purpose of improving future performance. Obviously, internal management are the intended recipients of the performance audit report. Let us identify what we mean by effectiveness and efficiency in the context of the performance audit. Effectiveness means that the entity is effective in achieving its objectives, however those objectives are defined. For example, an objective may be to manufacture a product with 0 defects. Efficiency is the degree to which costs can be reduced, and this is the important bit, without reducing effectiveness. So for our example, how can we reduce our production cost while still achieving 0 defects? Recall from week 8 our discussion of the purpose of an entity's internal control structure. At that stage, we focused on the relevance to the external financial statement auditor. The external auditor is only interested in controls that are relevant to the financial statements, that is, those that relate to the reliability of financial reporting and compliance with the law. Performance auditing, on the other hand, has a much broader scope and can be concerned with the efficiency and effectiveness of the entire internal control structure. The end purpose is to make recommendations to management to improve the internal control structure. There are 3 broad categories of performance audits: functional, organisational, and special assignments. A functional audit deals with one or more functions within an organisation, such as the payroll function, or the engineering function, or even the accounting function. An organisational audit is one that deals with an entire organisational unit, such as a department, branch, or subsidiary. Special assignments arise at the specific request of management and cover a wide variety of possible problems or issues. Examples include an investigation of a suspected fraud and a particular problem in IT. Who undertakes performance audits? As they are part of the internal audit function, they are normally undertaken by an entity's internal auditors. Performance audits are also extensively applied in the public or government sector to audit the efficiency of government departments, agencies, policies, programs, and projects. Public sector auditing will be covered further in the next video. Back to the private sector. If a company doesn't have the appropriate staff or has chosen to outsource its internal audit function, then performance audits may be performed by auditors from a public accounting firm. Public accounting firms need, of course, to be aware of any threats to their independence this may create. Of course, the 2 most important qualities for a performance auditor or internal auditor are the same qualities we require of external auditors: independence and competence. Turning now to internal auditing more generally. We have this definition of internal auditing from the IIA, the Institute of Internal Auditors in the US. As previously noted, the scope of internal auditing is very broad, and it is both an assurance and a consulting activity. As such, its purpose is to add value to an entity. In the contemporary business world, internal audit is seen as an essential part of an entity's risk management activities and an essential part of good corporate governance. This slide summarises some of the key differences between internal auditors and external auditors. A key point to note is that there are no restrictions regarding a licence or registration for internal auditors. You need not even be an accountant. The diversity of backgrounds and skills, such as engineering, IT or information systems, is much greater in internal auditing and reflects the broader scope of internal auditing activities. Finally, a reminder about the relationship between internal auditors and external auditors. In the interests of efficiency, they may coordinate their work programs around the testing of the internal controls over financial reporting. However, in order to do this, under ASA 610, the external auditor must first be satisfied as to the professional competence of the internal auditor. If a company outsources its internal audit function, it should not be to the firm that is its external auditor, as this is a threat to independence and, in fact, is banned in the US. To conclude, the internal audit function is critical to the risk management and performance of an entity, and both the internal and external audit functions are integral parts of good corporate governance for entities.